Hi, my name is Damon Riehl with LoanBidz.com. Today we're going to talk about the new inflation report and also what that means for you as an investor. So stick with me. If you like what you hear, hit the like or subscribe button and I'll be right back. Hi, welcome back. So we're going to talk about the inflation report. I was driving into work today and on CNBC, the new inflation report came out saying that it's at 7%. 7% annualized rate of inflation. So I know that may not be a shock to many of you. I know you've been feeling it, but it looks like, honestly, the Fed is going to need to do something here soon. So they're already talking about some things to do, but here's how it impacts you as someone who uses private money for your financing. So I have a lot of clients who do 30-year fixed financing for their rental properties. Once they've got them stabilized, a renter in place, all the work done, they're ready for that 30-year fixed loan. So right now in the marketplace, you can get a 30-year fixed loan in the mid 4-ish% range, and you can even buy that rate down to the mid 3% in some cases. So just think about that. Mid 4s to low or to high 3s, as far as an interest rate. Well, if you want to watch something, loosely watch the 10-year treasury, because these 30-year fixed rates are actually tied to the 10-year swap, which is similar and runs similar to the 10-year treasury, U.S. Treasury. So take a look at that. So what's occurred over the last few weeks is that those rates have gone up from about 1.45% to now they're at 1.75%. So 30 basis points or 0.3% higher in rate. So what's the impact of that to you as an investor who uses private lending loans? Well, the lenders that are in this particular space are not like Fannie Mae and Freddie Mac lenders who have already raised their rates kind of in lockstep with that rise of 30 basis points. So you'll see now that regular mortgage rates for owner occupied are now up around 3.5%. Well, let's take a look at that from the perspective of an investor. So at this point, as I mentioned, those 30-year fixed loans for you as an investor are likely in the mid 4% range. But the lenders are getting a lot of pressure to increase those rates right now. We've heard from a number of them saying we're going to try to hang in there as long as we can, but be ready and start letting your clients know that their rates are not locked until the final approval. So what does that mean for you? So as you're dealing with a private lender or dealing with us, when we give you an initial price quote, that particular price or that rate is as of today. Lenders in the private lending space don't change very often. As a matter of fact, over the last few years, they've only gone down and gotten better. But we're in a position right now where we may need to deliver some bad news to some folks, and we don't like that. So it's a situation where I'm instructing my account executives to let our folks know that the rate that we quote could be moving a little bit higher if rates move higher with some of these lenders, and to get their documentation in as quickly as possible so that we can get to that full approval and get that rate locked in. Okay? So what does that mean for you? So if you've got a portfolio of properties, or if you're finishing up some fix and flips right now and you're ready to or almost ready to get that renter in place, I would go ahead and engage your private lender or us and get that particular loan started. Get the information started together. They can't really run the appraisal until the work is completely done and your renter's in place, but you can get all that paperwork prepped and ready to go. So again, you can get to that final approval as quick as possible before rates go up, a quarter or 0.5%. So again, if that's something that's important to you, if you're really trying to get those done, or if you've got a portfolio of properties and you've been waiting for the right time to extract cash out of those, I wouldn't wait very much longer, because we're at the point where rates are probably not going down, and it's likely that, as the Fed starts to get busy with their tapering and with potentially rate increases this year, it's only going to reduce your benefit in refinancing. So if this is something that you're interested in, if you'd like to talk to myself or one of our account executives, give us a call at 636-552-4710, or simply go to LoanBidz.com, that's LoanBidz with a Z, and enter your loan request, and one of our account executives will get with you promptly. So until next time, everyone continue to stay safe.